Hello and welcome back. I'm Natalie MacDonald and you're watching Sydney Direct on Dukascopy TV. The fall in the Australian dollar is already helping out Australia's export industries, but with mining in its second phase and the fall in mining investment still in its infancy, my next guest, BIS Shrapnel's Richard Robinson, says there is more the government can be doing. Richard, many thanks for taking the time to chat with Dukascopy TV. Always a pleasure to catch up with you.
Thank you.
So we're talking about BIS Shrapnel's economic outlook. Now let's start firstly with a look at the Australian dollar. This is already supporting those import-export businesses, but are you seeing perhaps a further slip in the local currency?
Look, it's quite possible that when the currency starts falling, it gets its own momentum and often overshoots on the way down. Now our models, our exchange rate models suggest that it's somewhere near the trough, but I wouldn't be surprised for it to go well into the 60s. It could even go to the low 60s. A lot of people are calling that. It just depends on the momentum. It's if it stabilises around 70 cents and sort of stays there for a while, it's possible. But one thing that will drive it down is the rise in US interest rates. We probably won't follow, so you'll compress that margin and US interest rates will look a bit more attractive. So it might weigh down on our currency, but we think commodity prices are somewhere near their trough. They'll bounce around they could bounce around for the next year, but really it's not the commodity prices going to drive it down. It's going to be momentum and the rise in US interest rates.
Well, touching on that commodity price outlook, the BIS Shrapnel economic outlook actually suggests that the fall in investment in the mining sectors is actually only really in its infancy. We've got still quite a way to go. What role is those falling commodity prices playing in this whole trend timeline?
Look, even before the commodity prices really started collapsing, like about a year ago, we were already forecasting mining investment to sort of almost halve. So instead of a 40 to 50% drop now, we think the drop's going to be about 60% because there's a few more projects have been shelved, a couple of projects have even been shut down. So it actually accentuates what is already a steep decline, but you know it's probably like another 10 or 15% more, but 50%'s a lot. So 60% seems a little lot more than a lot, if you like.
So in terms of those sort of key investment themes then, are there roles government, particularly we've had a new ministry announced in just, well, yesterday. Is there more that government can be doing to try and support business investment, or is this simply going to have a snowball effect and roll along as recovery comes along also?
I think there's things they can do. They can bring forward some of their investment. For the government to invest now, it's a perfect time because investments come off all except housing. So it's probably the best time to do it now. You'll probably get the cheapest rates. You need a bit of a push in demand, and it's the growth in demand and profits which will really start driving the non-business investment. So now is a perfect time for the government to bring forward investment, and not just road investment like what Abbott had. You also want to be having other sorts of investment, rail, new technologies. That's the sort of thing they really need to do. There's probably other things they can do in terms of their policies here. Turnbull touched on it with the technology, but they should really be trying to sort of encourage, either via tax incentives or even just direct investment, this new technology, whether it's in renewables technology, because you've got to look beyond the mining boom and the mining boom is now in the second stage. It's all exports driven. It's not construction anymore. But they need to look for the new industries, and that's what they really need to do. So they can bring forward investment, and they can start trying to encourage those higher technology industries. Have an industry policy for a change. That would actually go a long way to setting Australia up for the future.
In terms of sort of that future movement then, with all that we've discussed in mind, what do you see as being those key growth drivers for the Australian economy?
Well, at the moment, dwellings is a key driver. It's not uniform across all the states. It's very strong in New South Wales. It's still got strength in Victoria and Queensland. But it's probably going to run out of puff within 12 to 18 months. In some states, we're already starting to see an oversupply. But that's still a strong base for driving forward at the moment. Obviously, the Australian dollar has given a lot of impetus. It all takes a while to come through. There's always a lag on that, but that's already starting to pick up. Tourism's picked up strongly, education's picked up. You're even seeing some inklings and green shoots in the manufacturing sector. So that's a key driver. The other big driver I already mentioned is mining exports. Mining exports are going to be strong. So you've got tourism exports, you've got education exports, mining exports. Agriculture is going to be a strong sector. So the export sector will be fairly strong, and it'll also, because of the dollar, you'll probably get a bit of import replacement, and that's going to be a bit of a driver. So that's going to be a strong driver. The last driver that will come through, and this the timing is difficult for this, is the non-mining business investment. Now, non-mining business investment is weak at the moment because they see weak demand and weak profits, but they've also got very low capacity utilisation. There's a lot of spare capacity, but once that starts getting used up and the businesses start to get a bit of confidence, that snowball effect you talked about before, you'll get that snowball effect. But you want to, that's why I think there's a role for government here. They can't just let low interest rates and dwellings push it forward.
Richard, thank you so much. Always a pleasure to receive your comments. Thank you.
Okay, thank you.
Always a pleasure to catch up with Richard Robinson of BIS Shrapnel. Do stay tuned, as I've still got plenty more exclusive interviews coming up for you right here from the heart of the APAC region. For now, though, it is goodbye.